Hello, everybody. Welcome to Tuesday. The S&P 500 was just barely down today, 0.06%, and actually had some kind of good news today. It's one of those bad news is good news things in an inflationary environment. So they came out today with how many open jobs are available. It came out at 8.7 million, which is a big number. Historically, you look back, that's a lot of open jobs, but it was 11.4 million jobs. What the problem was that when you have so many open jobs and so many people looking for jobs, and let's say there at one point it was two jobs open for every person looking, on the unemployment rolls, and that creates a very tight labor market, which can continue to exaggerate inflation. Right now, we're down to 1.3 jobs open for each person looking, getting much more so in balance, and that's what the Federal Reserve wants to see. That makes a job market that's functioning a lot better, is not as tight on the inflationary side. So that was kind of a big deal report that came out today. Of course, on Friday, we get the jobs report for how many jobs were created for last month. I bet you the market kind of waits around a bit this week for that to see what happens. So that was the big deal there. And then the big deal in the bond market continues to rally. So S&P 500 was down a little bit today, but the Vanguard Total Bond Market Index, which we use often as a proxy for how the bond market's doing, was actually up 0.6% today, which is a lot for the bond market, actually. And the yield on the 10-year Treasury, which was at around 5% back in October, is all the way down to 4.2% now. And again, that means the bond values have been going up, which is good for accounts. And it's good for the stock market because the stock market likes to see the yield come down because, bonds are a competitive asset class of stock markets. If you get high enough yield on treasury bonds, for example, people will put their money there instead of taking more risk and going into the stock market. So as that yield falls, more and more people start to look towards the stock market. So this environment's been very positive for the stock market, is why we had such a huge run last month. However, again, I've mentioned this before, but we're now 2 weeks into being overstretched to the upside. And so now we've had a couple of small down days here in a row this week. That makes some sense to me. If it just goes sideways or takes a break, I think that makes some sense too. Because really what you don't want it to continue to stretch and stretch and stretch and stretch, because then when it snaps back down, it kind of gets momentum. And all of a sudden you can end up with a situation where there's a much bigger sell-off than needed just because it went up so much before. So it's much better, get a little stretch to the upside, kind of come back down, take a rest. And that's a much more, healthy market, in my opinion. So it's kind of what I'm voting for here. I don't really like to see it come down, but I'd rather see little bits of steam come off here while we continue an upward grind than have a shooting market that comes back down really hard, just because sometimes it can get really, carried away. And, we always have to remember that the stock market is a representation of human emotion. And so, humans don't go in a straight line when you're talking about emotion, and neither does the stock market. So, it's going to go up and down. You just kind of hope that it kind of goes in a pattern that is sustainable. So far, that looks okay. Again, we did hit a new closing high last week, which is nice for the year. And we're, within 5% really of the all-time high that was set back at the very beginning of January of 22. So, things are okay. Really, they're still continuing to do well. Again, don't be surprised to see a little bit of softness here just because of the large run that we did have. But we're in a good spot, in my opinion, to maybe continue to grind forward. So we'll see how that plays out. But look forward to talking to you tomorrow. Thank you.